For a long time, I believed trading was about being right. Right about direction, right about entries, right about timing. I believed if I could just analyze harder, find better indicators, or follow smarter people, the market would eventually reward me for my effort. And for a while it did. I had winning streaks that made me feel invincible. I had moments where every trade felt clean, logical, almost elegant. That was when I thought I had finally figured it out. But here's the uncomfortable truth I didn't understand back then. I wasn't trading. I was forcing the market to obey me. And the market never forgives arrogance. There was a period in my career, about 7 years in, when trading stopped feeling like a craft and started feeling like a war. Every chart was a battlefield. Every loss felt personal. Every win had to be maximized. I wasn't listening anymore. I was demanding. I remember one night very clearly. It was late, the room was quiet, and I had just closed another losing trade that made absolutely no sense on paper. The setup was perfect, the logic was solid, the risk was controlled, and yet the market moved against me with surgical precision. I stared at the screen, not angry, just confused. That was the first time I asked myself a dangerous question. What if trading isn't about control at all? When I first started, like most retail traders, I approached trading like engineering: rules, formulas, confirmations, checklists. If X happens, then Y should follow. It felt safe, predictable, scientific, and in the beginning, that mindset helped me survive. But over time, something strange happened. The more experience I gained, the less mechanical trading felt. The market began to feel alive. Not emotional, not conscious, but adaptive, responsive, almost like a conversation instead of a calculation. And that scared me, because art doesn't obey rules the way systems do. Art demands presence, it demands humility, and it punishes those who try to dominate it. Most retail traders never reach this phase. They either quit early or they double down on rigidity. More rules, more indicators, more certainty. I did the same. I built systems so tight they left no room for breathing. And ironically, that's when my performance started to decay. Losses felt heavier, wins felt fragile, and confidence turned into tension. I wasn't trading the market anymore. I was fighting my own fear of uncertainty. The turning point didn't come from a big loss or a blown account. It came from exhaustion, from the quiet realization that no matter how good my system was, the market always had the final word. I could execute perfectly and still lose, and I could make mistakes and still win. That's when the question changed. Not how do I predict better, but how do I participate better? That question reframed everything. When I stopped seeing trading as a puzzle to solve and started seeing it as a craft to practice, something softened. I became less reactive, less desperate. I started noticing things I had ignored before: rhythm, tempo, context, not just price levels, but how price behaved around them. This is the part nobody teaches you, because it can't be taught the way strategies are taught. It has to be experienced. And usually it's experienced after you've been humbled enough times to finally listen. Trading at its highest level stopped feeling like math. It started feeling like music. You don't force a note. You don't rush the tempo. You respond. And when you respond well, the result feels effortless, even when it isn't. But here's the uncomfortable part. The moment trading becomes art, mistakes become more painful because you can no longer hide behind rules. When you fail, you feel it deeply, and that's where most traders retreat back into rigidity. I almost did. What pulled me forward was understanding why so many traders break right before they mature, why the market punishes those who chase certainty, and why treating trading as art doesn't mean being emotional. It means being precise without being rigid. That realization didn't make me rich overnight, but it made me consistent, and consistency over time changes everything.
The biggest mistake I made, and the one I see most retail traders repeat, was confusing structure with mastery. I believed discipline meant rigidity. I believed consistency meant repetition. I believed professionalism meant removing intuition entirely. So I built rules on top of rules. If a trade failed, I didn't question my reading of the market. I added another filter, another confirmation, another condition that had to be met before I was allowed to act. On paper, everything looked flawless. In reality, I was suffocating my own edge. What I didn't realize was that most trading mistakes don't come from lack of rules. They come from using rules to avoid responsibility. When a trader says, "the system failed," what they're really saying is, "I don't want to accept that interpretation is part of the craft." The pain didn't show up as one catastrophic loss. It showed up slowly. Trades that should have been taken were skipped. Trades that should have been left alone were forced. I was always late, always early, always slightly out of sync. And that's when frustration turns into self-doubt. You start questioning everything: your strategy, your psychology, your future in trading. Retail traders often think the pain phase is about losing money. It isn't. The real pain is losing trust in your own perception. When every decision feels wrong, even the right ones stop feeling safe. That's when most traders either quit or search for a new system. I didn't do either. Instead, I did something far more dangerous. I stayed, but emotionally checked out. I executed mechanically, without engagement. No curiosity, no listening, just rules firing orders into the market. My results were flat, emotionless, and deeply unsatisfying. The revelation came in an unexpected way. I was watching price react around a level I had marked dozens of times before. Same structure, same context. But this time, instead of rushing to execute, I waited. Not for confirmation, but for behavior. The way price slowed, the way volume thinned, the way rejection wasn't aggressive but hesitant. I didn't trade that setup. And for the first time in weeks, I felt relief instead of regret. That moment changed how I understood trading. I realized that rules are not there to make decisions for you. They're there to support judgment, not replace it. A painter learns techniques, but the art is in knowing when not to use them. A musician practices scales, but the performance lives between the notes. Trading is the same. At some point, the market stops testing whether you know the rules. It starts testing whether you can read context without panicking, whether you can stay present without forcing action, whether you can accept uncertainty without trying to eliminate it. This is where many traders misunderstand the phrase trading as an art. They think it means intuition without discipline. It doesn't. It means disciplined perception. It means understanding that no setup is identical even if it looks identical, that probability isn't static, that timing matters more than accuracy, and that execution is not a checklist, it's a conversation with risk. Once I accepted that, my relationship with losing trades changed. Losses stopped feeling like failures and started feeling like information. Wins stopped feeling euphoric and started feeling quiet, grounded. And strangely enough, that's when my equity curve stopped being dramatic and started being stable. Not explosive, not exciting, just sustainable. That's the price of maturity in trading. You give up the fantasy of domination in exchange for alignment. And alignment, over time, outperforms aggression every single time.
When trading becomes art, most people misunderstand what actually changes. They think it becomes subjective. They think it becomes emotional. They think it becomes vague. In reality, it becomes more precise, not less. The difference is this: you stop trying to predict outcomes and you start learning how to read intent. Early in my career, I was obsessed with accuracy. I wanted to be right. I wanted clean entries and perfect exits. But accuracy is a retail obsession. Smart money doesn't care about being right. They care about being positioned correctly when liquidity shifts. This is where most retail traders lose the plot. They analyze price in isolation. Smart money analyzes participants. Price doesn't move because of indicators. It moves because someone needs liquidity, someone is trapped, or someone is being forced to act. When you start seeing the market through that lens, trading stops being mechanical and starts becoming interpretive. Let me give you a concrete example. There was a period where my strategy had a solid statistical edge. Back tests looked good, forward tests were acceptable, but live execution was inconsistent, not because the setup failed, but because the context changed. Same pattern, different crowd. Retail traders were chasing breakouts aggressively. Stops were obvious. Liquidity was thick above highs. The setup technically worked, but only if you understood who was providing liquidity and who was consuming it. I started noticing something subtle. The best trades didn't come when everything aligned perfectly. They came when something felt slightly uncomfortable, when the move looked weak, slow, almost disappointing, right before it accelerated. That's not intuition, that's experience recognizing behavioral asymmetry. Smart money doesn't enter when certainty is high. They enter when others are conflicted. That's where risk is mispriced. That's where art emerges, in timing, not prediction. Another realization changed everything for me. Most retail traders treat losses as errors. Professionals treat losses as fees for information. When I reframed losses this way, my execution changed overnight. I stopped forcing trades to make the system work. I stopped revenge trading. I stopped trying to prove anything to the market. Instead, I focused on one question before every trade. Is the market inviting participation, or am I trying to impose it? That question alone filtered out more bad trades than any indicator ever did. There's a case I often think about, a range-bound market where breakouts kept failing. Retail kept buying highs, getting stopped, and re-entering. Each stop added liquidity. Each failure strengthened the trap. I didn't trade for hours. When the real move came, it wasn't explosive. It was quiet, controlled, almost boring. But the structure was clean, the crowd was exhausted, and liquidity had already been harvested. That trade paid for the entire week. Not because the setup was special, but because I waited for alignment between structure, behavior, and intent. That's the essence of trading as art. Art is not chaos. Art is sensitivity to nuance. It's knowing when not to trade. It's recognizing when the market is speaking and when it's just noise. It's accepting that your job is not to extract money from the market, but to participate when the conditions are favorable. Most traders never reach this stage because it's uncomfortable. There's no checklist to hide behind, no indicator to blame. When you trade this way, responsibility is total. And that's exactly why it works. Because once trading becomes art, you stop chasing outcomes and you start respecting process. You stop reacting to price and start responding to context. You stop asking, how do I win more? And start asking, how do I avoid losing badly? Ironically, that's when profits begin to compound. Not fast, not dramatically, but reliably. And reliability in trading is the closest thing to freedom you'll ever get.
When trading becomes art, the application is never about doing more. It's about removing what no longer belongs. The first thing I changed was not my strategy. It was my relationship with action. I stopped treating inactivity as weakness. I stopped measuring my days by how many trades I took. Instead, I measured them by how many bad trades I avoided. That shift alone reduced my drawdowns dramatically. I began operating with a simple internal rule. If a trade required me to convince myself, it didn't belong to me. Real opportunities don't need persuasion. They invite participation quietly. When the market aligns, you feel it.
Not emotionally, but structurally. Risk is clear. Invalidation is obvious. There's no urgency. The second change was learning to trade one idea deeply instead of many ideas shallowly. I stripped my approach down to a single core setup and studied it across different conditions: trending markets, ranges, high volatility, low liquidity. I wasn't trying to make the setup work everywhere. I was trying to understand when it shouldn't be used. That understanding created restraint, and restraint created consistency. The third change was redefining discipline. Discipline wasn't about forcing execution. It was about protecting mental clarity. I stopped trading when I was tired. I stopped trading after emotional wins or losses. I respected the fact that my perception was part of the system, and perception degrades under stress. Most retail traders don't lose because their strategy is bad. They lose because they trade while misaligned, fatigued, impatient, needing something from the market. Art doesn't work that way. Art demands presence, and presence demands boundaries. When I applied these principles, my results didn't explode. They stabilized. Equity curves flattened before they rose. And for the first time in my career, I stopped feeling like I was surviving the market and started feeling like I was working with it. That's the lesson most traders never hear. Trading isn't a problem to solve, it's a relationship to manage. When you treat it like engineering, you'll fight it. When you treat it like gambling, it will destroy you. But when you treat it like a craft, practiced daily, refined patiently, respected deeply, it rewards you in ways most people never experience. Not just financially, but psychologically. You stop chasing validation. You stop needing to be right. You stop fearing uncertainty. And that's when trading stops consuming you and starts supporting your life instead of controlling it. If there's one thing I want you to take from this, it's this. Mastery in trading doesn't look impressive from the outside. It looks quiet, boring, almost invisible. But beneath that calm is freedom, and freedom in the markets is rare. If this resonated with you, if you felt that shift or you're standing right on the edge of it, then you're exactly who this channel is for. Subscribe to Staro Trading. Stay with the process. And remember, master yourself and the markets will follow.